Hello everyone. We're gonna start within like 1 minute. This is a very important lesson in my opinion, especially with all what I see right now. Like people opening like random positions without understanding like how they're supposed to trade, why they're supposed to chill, like when they're gonna stop, and so on and so on. So it's kind of important. So, what is average daily range or ADR? It's basically it measures how many pips and set moves on average during a trading day. So we're not gonna use like pips. We're gonna use like percentage. It's like points. Like you can measure this in anything you want. But I like to measure it in percentage because it's always unique. It's not gonna be changed. So like market used to like move like 20 pips. Now it's moving like same 20 pips, but percentage is gonna be different, right? So like euro, for example, used to move like 20 pips. And it used to be like 0.1% or 0.2%. Now it's 0.25%, and same like for 20 pips, but percentage a bit like more, and so on and so on. So it's better to measure in percent. Same like for indexes, especially when indexes like went up by a lot. So for example, SPX usually average ADR back in the days was around like $50 move. Now it's about 100, so it's like doubled, but in percentage ways it's just like almost pretty much the same. Maybe slightly bit more, like 10 or 20% more. So you see, like percentage is always better, no matter what you're doing. Okay. Ah, yeah. Short though. What do you want to short here? 30 minutes fair value gap. Like if it absorbs this one, yes. Yes. If it absorbs this, I will agree. You can jump on 15 seconds, but I don't know, man. But yeah, if it breaks down below and close down below, sure, you can do something like this. 60 bucks and move all the way down like $180, 0.3%, which is nothing, right? Anyway, yeah. Okay, now let's go back to the lessons. Like how ADR helps, like average daily range. It helps you estimate the realistic daily movement of a market, avoiding chasing like trades after most of them already like happened, right? Or move already has has happened once again, or like occurred, whatever. Um, one sec. Oh, just maybe it's short, just shorten. Anyway, best example. Nasdaq today up 2.6%. So average ADR for it about 1.5, like 1.5%. How you can calculate this like ADR? You can use like some tools, like some indicators, or do like I do. I just open like daily chart and see like how much on average like price moves. So like I just like take about like 200 days, maybe like 300 days, and I just check every single candle, or probably like there is indicators that allow you to do it like extremely quick. So it just calculate like everything. Let's check it out. ADR, average daily ratio, daily range. Yeah, this one. This one. 14 days. Yeah, it's calculated. So as you can see, on average, it moves Dow Jones about like $500. So here it was a bit more, but if you can calculate lengths like 200, should be smooth. Yeah, it's about like 500. Yeah, something like this. So you can do the same like for everything. I just want to see in percentage. Can I do it in percentage? Default. No, we cannot do it. Unfortunately, we cannot do it. Chess. Shorten? Chess. Are we shorten? Chess. Are we shorten this one? Okay, shorten, right? 10, 16. Okay, chess. If I below this account, you're gonna buy me a new one. Deal? Okay. Okay, great. So, going back to the lesson. You can use indicators, or you can just like test it, but indicators are pretty fine. So it gives you like average move on the chart. So make sure you open daily chart for it. So it helps you set realistic profit targets. So like if price moved, let's say like already like on Dow Jones, price moved as we see like average ADR about like 500, 530, and index moved already for 700, $800. So are you gonna look for longs? I don't think so. I don't think so. You will be looking for short. If price like moves like down, so it's already dropped $500, are you gonna look for shorts? No, you're gonna expect like, yeah, you can work with continuation or for continuation, but when price already moved more than like on more than usual, like around like $500 in Dow Jones case, most likely it can bounce like somewhere, especially if it drops like heavily, like price like went down 1k. So it definitely gonna look like for some sort of bounce. This is like one of the greatest like average plays that I do like based on it. It's some like balance play, like 1-to-1 risk reward or something like this. You try to find some small shift and look for like bounce on the 1 minute time frame. So it usually looks like this. So price like moving down, so it's already like when like too much, so look above like average ADR, and I'm looking for some zones or liquidity that can be taken, and price can like reverse and go higher. Okay, so like average ADR like 500, it's already like at 800. I'm start looking in low time frame for a loan. This is a small play, um like not bad one, and gives solid returns and great risk reward. So it's also avoiding entry trades when most of the daily moves has already happened. So like today, because this meme trade I opened it on one account, especially to like for a chess guy, because he promised me a new account if I'm gonna blow it, because I went all in. But overall, like on German 40, on Nasdaq, I didn't look like for any position because price already moved like more than average. So I cannot open short position because we don't have a single shift even on 1 minute, and I cannot open long position because price like went too deep into premium. So it always has to like rebalance. Identify potential exhaustion point, like I said. So let me see. DRF helps. Here we go. Improve like risk to reward calculation. It's quite simple. Chess. Okay. So let me see my profit. I'm plus $80. $80 on this account. No. Okay. Pum, 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 pum. But keep in mind, ADR is not guarantee, so you cannot open trade based on it. Like as a solo element is not it's not that important like trend, liquidity, like time and premium discount. But it's a nice tool to have like in your mind, like when you're trading, because it allows you to avoid unnecessary trading, and that allows you to open trades or like look for trades in most lucrative places, or be ready for open trade in the opposite direction, right? Look for reversal, especially when talking about like index. Okay. Do you have any questions? Chess. Questions. Let's go. You probably didn't understand the shit, so ask some questions. No, chess. I'm gonna close. I'm sorry. I'm sorry. Yeah, I closed, sir. I don't like it. I had like free account, but I'm gonna save you money. Okay, I'm gonna save you money. Hey, wait. We had like 1-to-1. Yeah, I had 1-to-1. Yeah, ADR is nice. It's nice tool. So like, if price like went like, especially in euro, like let's talk about examples, especially in euro. So euro usually moves about like 0.2, 0.25% from daily open. So if price like moved already 0.4%, right, or like 44 pips, when on average it moves about like 20 pips, 25 pips, actually 25 to 30, right? So you're not gonna open position. You're not gonna look for longs, even if you want to. Um, that's what I don't like here. Uh, Euro been volatile. Euro been volatile lately. So I see like it went up here. What about Nasdaq? So Nasdaq on average move about like 400 bucks on average. Between, yeah, let's say 300 till 400. This amount. This is average move. So right now it's almost doubled. It's almost doubled. It's not an option. What about gold? So gold moves on average for the past half a year. Just going up. So yeah, let's say here $100. 3%? No way. Yeah, it's more realistic. 50. Yeah, I see like volatility went up. So it's here. Yeah, I told you. Man, I literally told you. It's also SMT. Don't like just I told you don't trade. And that's it. That's simple.